Hello, everybody. Grady Polson here, coming to you live from our Family First Life America office here in Arizona. Got a training for you today that I recently just did in Las Vegas. It was the closeout to the summer sales conference. And essentially what I did is I went over 11 things that you can add to your presentation that maybe you're not doing right now, that if you add them, you'll start making more money. And so that's usually the goal. This is kind of some things that I do, some things that are specific that I don't hear a lot of other people talking about, that if you start to implement them, you will close more appointments, you'll build more credibility with your client, they'll begin to trust you more, and ideally you will close more policies. So let's go through it real quick. So let me start this process. And the big thing to understand about selling insurance and about what we do here is that clients buy from you when they trust you. And so what does that mean? They trust you. They trust that, one, you as a stranger in their home as of 45 minutes prior, now sitting there telling them you're going to be there for them, they trust you're not a liar, okay? They trust that you're going to be there for their family. They trust that what you are offering will ease for them the pain in one of the hardest and most awful times in their entire life. And that's where, and how do we create trust? We create trust through credibility sheet. You can grab me a credit, in my bag right here, there's a black, like kind of leatherette folder. If you could grab me out a credibility sheet and financial inventory just so I have them. And so that's what you're trying to do. You're trying to create trust. You're trying to create for them the belief that you're the person that's going to be there for them, because you single-handedly could impact, and the sheet behind it too, could single-handedly impact their family's present and future and generational life. And so I know it's a little bit of heavy weight on your shoulders, but thinking about the products we offer are really some of the best things that we can do for people to get them in a position where their family just hurts less. And that's a lot of pressure, it's a lot of power, but it's also very gratifying as a person and a provider to know that you're able to put something in place for that family, that they're going to think of you and be grateful for what you've provided for them. So that's why clients buy. Clients buy from you because they trust you. And if they trust you, they'll do business with you. So what I want to kind of go through here, and a lot of the things that I believe I do, why I don't get objections on the check, why I don't get objections on the Social Security number, why I get a lot of my clients I sit down with to submit a request for coverage, are the word tracks that I'm going to deliver for you now. And this is being recorded, and so if you're watching this on replay, kind of go back and through this, and I'll tell you my marginal success in selling at Family First Life is purely a correlation to how much training I've listened to from Paul McLean and Andrew Taylor and Matt Smith and all the other greats that are in our company. A culmination of training and then added with experience is thus created where I'm at today, and ability to kind of overcome things. There's still things I struggle with. There's still things I'm going through. There's still things when I run into them, I'm like, well, you know what I mean? So what I'm going to tell you is that, but if I can help you knock out 97% of those, then you're going to be better off. Okay. So let's go through that. So these are 11 points that you can start to implement that will thus yield for you greater success in selling. And the first one is setting the table better. Okay. Setting the table better. And what does that mean? Setting the table is when you come in the house and you go, now, Jane, is this a shoes on or a shoes off house? And then she goes, yeah, it's a shoes on. You're fine. Oh, you're fine. And then she tries to guide you towards the couch. And you go, oh, actually, can we sit at the kitchen table? I need to write stuff down. And you go kind of guide her to the kitchen table. You're in control from the beginning. You go and sit down at the table. And what do? You lay out the lead card. You lay in front of her the financial or the credibility sheet. In front of you, you've got the financial inventory, and you give her a business card as well. Okay, so I want to go through with you my open. And there's a lot of things I say in my open that is when I sit down, it's not like, hey, we're chit-chatting about the yard, or we're looking at, oh, Fluffy's so cute, and oh, you collect plates and spoons. Okay, and it's not about like chatting, it's taking control. You're there to do business, right? You've got a collared shirt on, you're carrying a bag, you're well shaven or well dressed, you smell good, right? You're a professional. You show up there to do professional work. I don't wear shorts in my appointments. I wear slacks. It's 111 degrees here. Doctors don't wear shorts to the office. So little things, right? All little things that I'm doing as I go into My appointment, I'm walking in this house, and the assumption is this guy knows what he's talking about. Did I know what I was talking about on January 3rd of last year when I started? I had no freaking idea. I had zero idea. But you know what I had? Faith. I had faith that the system would work, and that if Andrew and Paul and all these other greats and Trey and Joe and all these other incredible people who or normal people who are having incredible success are having success, I knew at some point they knew nothing also. So if I know nothing on January 3rd of last year, what can I learn in 18 months to put myself in a position where I'm able to go in homes and close a significant percent of them? That's what I want to deliver for you right now. So my open is key to setting the table. Why don't clients trust you? Why don't clients want to give you their social? Why don't clients want to give you their banking information? Because they don't like you. They don't trust you. They don't believe that you're going to be there for them. And if I've beaten this horse to a pulp yet, that it's important, because if you practice more on the front end, if you set the table more on the front end, like just take just take a minute, just give me the information. I just want the quotes. Give me the quotes. I understand you want the quotes. I want to, and it's just real slow. I want to give you the quotes, but the reality is I'm holding it like this. I'm a field underwriter, so I've got to gather this information, and then from this, I'm going to shop between all these different companies, and then tell you which is the best one that you can get qualified for if they approve you. So it just takes a few minutes, but we just need to answer these questions. They're not in control. I'm in control. They get uppity, I stay calm. And so it's really like, as you start to progress in this business, understanding that how you engage in these interactions with clients is going to yield whether or not you're going to close a sale at the end. If you're in control, like I go to the doctor's office, doctor says, Grady, you need to start taking X medicine, otherwise you're going to die. I'm not going to go, I don't want to take it, right? I don't want to take it. I don't really like it. I might maybe gain some weight, or I'm not challenging the doctor. When you're in control, your clients are not going to challenge you. They're going to respect you and trust you. So how do we do that? Setting the table properly. Here we go. So I've got this thing in front of Jane, and we talk about, and I say to her, okay, so this is the thing. I've said this a bunch of times, and if you guys can start to pick this out, and if you want to write this down, or however you want to do it, or something like this. If you have something that's working, then just keep working it. But if you don't have anything that's working, then use this, and it'll work for you. Okay, so, all right. Hi, Jane. Like I said, my name's Grady Polson. Nice to be here with you. The reason why most people fill these out and mail these into our office is because they either just purchased a home or just refinanced the property, right? So there's mortgage protection. All right, Jane, the reason most people request this coverage is because they want to put something in place. So if something happened yesterday, death or disability, some money comes in the family today to ease that family's stress in transition. And they always go, okay. So what my job is, right? My job is I'm both a field underwriter, I point at this, and an independent broker, I point at this. Field underwriter, I'm going to gather some quick information. Independent broker, they contract me with about 20 different companies, which allows me to really shop around for you. And I point at this and find products that are affordable, comfortable, but in the end, we need to see what it is that you qualify for. Now, they're all A-rated companies. You probably recognize a few. But the big thing, Jane, is I'm non-captive, right? So captive, that's like State Farm, Farmers, Allstate, right? Where they have about 2 products, I literally have access to 100. And where they're, as a captive agency, they're basically just employees. And where my job is I'm totally an independent broker. So I'm strictly looking for the best coverage, the best price that you can get covered for. And they're like, okay. So what we're going to do is we're going to take about 2 minutes on some money questions, 2 minutes on some health questions, and then about 5 minutes, we're going to look at some different insurance options that you may qualify for based on how you answer these questions right here. Okay, then what we're going to do is we're going to submit a request for coverage based on the carrier that you pick. We're going to submit a request for coverage. Request for coverage takes anywhere from a week to 4 weeks for them to decide if they want to grant you coverage. They're going to look at your prescription history, your background. They're going to make sure you are who you say you are. They're going to make sure no one's trying to get insurance in your name. Make sure you didn't escape from prison and you're hiding out here in Mesa. You need to make a little joke with them, right? So it's about ups and downs, right? Make little jokes. Then if you're approved, you're approved. Now, if you're declined, I'm a broker and we're going to pivot to another option. But if you're approved, you're approved. Excellent. So like I said, I'm just a field underwriter, not a salesman. I don't even take any money today. So let's get started. And so when you go through that, you're knocking out, oh, I've got my farmer's agent, right? You're knocking out, I need to think about it, right? Because we need to submit a request for coverage. It's going to take 1 to 4 weeks. We don't get to decide. You're setting so much credibility out in the beginning that by the time you get to asking them questions, you could ask them for anything and they trust you because you've let them know you're someone worth trusting. Does that make sense? Anyone who's in the chat, like, give me a yes if you guys are following along. Give me a yes in the chat below, because it's crucial for you to start to see that some of these things are things that you can seriously start to implement in your business. And if you start to implement them in your business, what will happen for you? You'll start to sell more insurance. Why? Because clients will trust you more. And that's what's crucial. And that's really where we're at as new agents. And so what can you do? Could you, as a new agent, could you study all this stuff that I'm saying and study all the client sheets and study all the product information and then get out there in the field in 3 months and still not know what the heck you're doing because you haven't actually done it yet? Or could you just kind of learn some of these quick word tracks and learn these points and say, knockout captive, independent broker, field underwriter, request for coverage, and just kind of have some notes in your head that you know you need to go through, sit down there, gather the information, call your manager and say, Grady's sitting with a client, she's 67, takes metformin, no other health issues, and I reply with America Eagle will cover her? Yes, and then guess what? You get paid in 2 days instead of 3 months and 2 days. And so that's real something for a lot of you new agents watching this. This is like, I'm trying to give you like the bigger picture, right? I've used this analogy before. A mentor once said, learn how to pay your taxes as though you make $1 million. Learn that, because if you never learn that sort of mentality, hook yourself to the future and act like you're going to be there, then you're never going to be there. Like, prepare yourself for where you're going to be. Don't prepare yourself for where you were, right? I don't use TurboTax. I use a CPA who's a very good CPA, right? Just some little things here. So in that regard, setting the table, number one. Number two, okay? This is a good line I learned from John Wetmore. Okay, John Wetmore, hit Hall of Fame. He's also a board member, $1.1 million agency out of Atlanta. Great guy, but he's sold a lot of insurance and has this excellent line. So you're sitting down with the client and they're showing, you write down, you know, mortgage amount is $2,000, Bob makes $6,000, Mary makes $6,000. Okay, so you write them both down. And then you're going through it and you're talking to them and you get to the point where you're like, you know, now what would you do, Mary, if Bob died? You know, would you be able to afford the mortgage? She's like, yeah, I make $6,000 a month. I'll have no problem. Okay, so you're kind of like, what do you do? So how you knock that out is earlier in the appointment, when they tell you their incomes, you say this line, this is the line. You say, now Mary and Bob, if your household's anything like mine, I bet it takes both your incomes to make it work. And they're going to go, oh yeah, you know, with the kids, with the, you know, food and the costs and the cars and the upkeep and all the stuff we've got to pay on, right? When you make 12 grand a month, you find a way to spend all 12 grand usually, right? So like, and this isn't a finance class on money. This is just stating a simple line where you can knock out the fact that they think they're going to be fine. Now, Bob and Mary, if your household's anything like mine, I bet it takes both your incomes to make it work. Oh yeah, it does, right? So you say that early enough that they've already like agreed they cannot afford this without you, without the protection you're able to offer them. So good line this is what this training is going to be. Some good things that I'm like, what aren't I hearing people talking about that I do? Like, I've been sitting the last 20 appointments, like working on this training because I knew I was going to be speaking to Vegas. And I'm like, what are these things, these little things that aren't talked about a lot on calls? So that's what I'm trying to give you guys. Okay. So that was number two. Number three is a little bit about life insurance, what the value of actual life insurance is. And so oftentimes if we're saying like we're using like an HMS 125 cashback option, and people will think about different investment strategies, or they'll talk to you about, you know, maybe I do want to get all my money back. Well, let's talk about why it's so valuable to get all your money back in 15, 20, 25, or 30 years. And the reason is life insurance, here's the line, life insurance is the greatest tax exemption in the US tax code. Life insurance is the greatest tax exemption in the US tax code. It's one of the only vehicles you can put money into, and then when you pull it out in the future, it comes out tax-free. So like when I'm doing an HMS policy, I'm talking to the client and I'm saying, now right now Trump has us in what's called a sunshine provision, which is true. It means he's lowered taxes between 1% and 3% across all tax brackets. Now it's written in the tax code right now to go back up in 6 years. So we know taxes are going to be higher in the future. Wouldn't it be better to get money back in the future that was tax-free when taxes were higher? And the client will go, yeah, that makes a lot of sense. And so it's talking about that. It's a big thing too, talking about the death benefit that then comes to the family is tax-free. And so that these are key things. Like, I mean, a lot of us maybe are, and myself included, are living in a world where we don't make a ton of money when we're starting this business. So we don't really have taxes and finances and tax-free and the benefit and tax deferred and all these different terms that are thrown out. We don't really understand them. But there's the two best kinds of money are free money and then tax-free money. So just learn that right there. The free money is the best. Always the best money is the free money. 8% bonus, that's free money. And then second is tax-free money. And so to get any amount of money back out of an investment, so the HMS 125 CBO product works like this. Bob, if you die, they're going to give Mary money to pay off the house. If you get terminally ill, critically ill, or chronically ill, they're going to give you money to extend your life to live longer. And listen, Bob, when you don't die, they're going to give you all that money back that you paid into it tax-free. I've been paying car insurance, homeowners insurance, and health insurance for 35 years, and I've gotten $0 back from any company I paid on. And the whole time, just like this insurance, I hoped I didn't have to use the product. Right? I hope I don't get in a car accident. I hope my house doesn't burn down. And I hope I don't get sick and have to use my health insurance. I can't think of any other insurance where they give me back all my money that I paid in and that money comes back tax-free. So life insurance is the greatest tax exemption in the US tax code. Big thing. So even when you're using that line, when you're talking to Dolores about the $12,000 she's securing for her daughter, Jamie, and just wants to make sure she gets money. Now listen, because this money's life insurance, it's going to be part of one of the, because insurance is one of the best exemptions in the US tax code. It's going to go to her tax-free. She's not going to pay any taxes on it. The money comes directly to her. Does that make sense, Dolores? Yeah. Oh, that sounds great. I want some of that, right? Okay. That's number 3. Number 4, group policy. How do you kick out a group policy? I kicked out a group policy by educating the client a little bit about a group policy. First, what group policies are, a group life insurance benefit is not the greatest tax exemption of the US tax code. The reason is because Bob at his job at the mill is paying for his life insurance with pre-tax dollars. He's paying for it out of his check before the check is cashed, before it's taxed. So what that means is that when that life insurance benefit goes to Mary, instead of being $100,000, it's $70,000 because Mary now has to pay taxes on that life insurance benefit because it was a group policy, a work policy. So I understand, Bob, you've got this great work benefit that Nancy down in HR set you up with it. She's got you all dialed in. I get it. But do you understand how that policy works? And so here's some additional things on how to kill a group policy. Listen, Bob, you have to actually die at work. Not like at your desk, physically at your desk, but actually at work, meaning that like in an active status at work. So say, Bob, you get sick, okay? You get sick and you have to go on short-term disability. And then after short-term disability, you go on long-term disability. And at some point, Bob, if you're still too sick to come back to work, they're gonna call you and say, hey, Bob, we need you to come back to work. And if you can't, guess what? Your benefits run out and you no longer have any insurance. And now your health is in a position where you're probably not going to qualify for any insurance. So Bob, what most people do is they secure insurance through a private carrier, through a private contract through a carrier where it's an agreement between them and the insurance company. They don't rely on Nancy down in HR to be the one who's guiding their whole family's financial security. Does that make sense, Bob? Yeah. Oh yeah. Okay. A couple other ways you say it. A group policy is like a company car. You don't get to take it with you when you leave. And it has to be an active status. So a couple of things about a group policy. But those are some crucial things. People they're like, oh, and the big thing about group policies too, a lot of people, like there's a statistic that say most 30-year-olds have had 9 jobs by the time they hit 30. 9 different jobs. So people bounce around jobs a lot. Guess what also happens? Any company at any time can go, you know what? Costs are too high right now. We're going to kill all the entitlement programs, the benefits. What companies did? Like 3M did it, Ford did it, big, or GM. I mean, don't quote me on it, but one of the big car companies recently canceled all their life insurance benefits for like 90,000 employees. 3M, Sears, Barney, thanks Barney. Sears did it. Like, so companies just go, hey, we can't afford to pay this anymore. So we either stop paying your pensions or we don't fund your life insurance. At least we're going to keep you getting some money actively while you're alive. That post-life money that we promised you when you signed up and worked here for 33 years, well, we can't offer you that anymore. So, Bob, don't rely on a group policy. Okay, Bob? So, there we go, group policy. Hopefully this was helpful. Next, number 5, accidental. If you have your health license, you can sell a Mutual of Omaha accidental. And you also, if you don't have your health license, you can sell Americo's accidental product. Both great products. The value of an accidental is this. It's an awesome downsell, pivot, or add-on. So 3 different directions. Downsell. I just can't do 150 a month right now, Grady. Can't do it. Like, I understand, yada, yada, yada. But I can't do it. Okay, perfect. I understand, Jim. What most people do in your situation is they put a small sort of traditional mortgage protection or a tragic policy or an accidental policy, a gap policy, an umbrella policy, pick the words you like, small umbrella policy to cover sort of anything tragic happened in case of an accident. It would pay off, it would pay out the family a big chunk of money. And so that's a great downsell. It's also a pivot, right? And same a downsell and pivot, I mean, same sort of psychology there. It's also a great add-on. A lot of you guys are adding it on, right? You sell $20,000 of whole life, add on $100,000 accidental as well. Add on $250,000 of accidental as well. It's a great add-on. Accidental covers, and if you got a healthy person, use these words. They're healthy. Listen, Dolores, now what's the most likely way you're probably going to pass in the near future? Now, I'm not a betting man, but if I was to bet in the next 1, 3, or 5 years, you most likely or probably die of an accident because you don't take any medications. And so that being said, what most people do is they want to cover themselves against something tragic or accidental to leave that family a big chunk of money. Does that make sense? Yeah. So a lot of things, I say, does that make sense? And what most people do constantly throughout my appointments. Does that make sense? What most people do. What most people do. Most people do this. Most people in your situation. Now, in your situation, this is what most people do. And I say it constantly because there's a great training called the herd mentality. And the herd mentality is that people want, as natural, as humans, we generally want, we exist in groups, right? Animals exist in groups and in packs, in herds. And if what most people are doing is getting these insurances, if most people are doing this, if most people get that or this, then likely if that's what you're saying to your client and you're the seasoned expert sitting in their home, guess what? They're going to trust you because you establish trust at the beginning of the appointment and do what most people do, which is listen to your advice and do what most people do. So if you say that constantly, it's going to get them educated on what most people do. Okay? So I hope that helps. So accidental. Number 6, solvency ratio. So how I always describe this is like this. I talk about a solvency ratio. Clients will go, now what happens if this company goes under? Or what happens if this company goes under? Like they'll just say it like they're so educated and like insurance companies fail all the time. They're just throwing stuff at you. They're just throwing stuff at you. And so I describe a solvency ratio like this. I say, listen, insurance companies have what's called a 100 to 100 plus solvency ratio. And what that means, it means for every dollar of insurance they have out there in the marketplace, they have that much or more in reserve accounts that allow them to pay out if something happens, something catastrophic, a tsunami or something tragic. And I whisper like a bomb, it's like I whisper like something tragic, a tsunami, a hurricane, or something unfortunate could happen. And Jack Y has this great line. He says, listen, these companies have enough money that way. If every single client in America died on the exact same day, they had enough money to pay out all the claims and still some left over. So you don't have anything to worry about. Solvency ratio. So use that term, right? There's a silly line. Say smart things, people think you're smart. Well, as you start to learn this, you're not saying smart things. You are smart. You're good at this business. You're becoming educated on the things that are the pillars of life insurance. And if this is a career that you're choosing and you want to make a lot of money with us, then learn these things, say these things, implement them into your presentation, and you'll get the results from it, okay? So solvency ratio, that's number 6. Number 7, how are you quoting final expense? And this is how I quote final expense, okay? So hypothetically, Dolores makes $1,500 a month, right? I'm going to show her 2%, 5%, and 7%. So I'm going to show her, what, $30 a month, whatever that equates to, $75 a month, and $105 a month. It's a big one. Okay, so also in some situations, maybe it's just, you're going to show them, 10K, 20K, 30K. But the reality is it's all dependent on this. And final expense, in all insurance sales, a lot of it means people buy emotionally but rationalize logically. Is that right? I think that's right. So if logic says they can afford it, emotionally they're like, yes, I know I need coverage. I know I need coverage. I know I need coverage. But if the logic says that, I'm showing her $300 a month, she's like, I can't, my rent's $850 and I eat on $450 and I've got a little bit left over that I know I need to get some coverage put in place. So it's all kind of based on the situation, but a good pillar to start with is start with the 2, 5, and 7% mentality. Because then you consider, now Dolores, this is just about 5% of your monthly income. This is about 2% of your monthly income. This is 7% of your monthly income. And when you go on the higher policies, imagine, you're sitting with a younger person who's making 5, 7, 10 grand a month, and you're making $5,000 a month, and you're like, now this is $100 a month. Oh, I don't know if I can do that. Listen, that's about 2% of your monthly income. You understand that? 2% of your monthly income to protect your family. If something happens, God forbid, Mary can keep here and stay in the house. And so when you talk like that about like educating them on the numbers at which you're showing them, it's a far more valuable proposition because it makes sense. Okay, yes, I guess 2% isn't a big deal. 5%, that's not a big deal, right? And they can see that they do have this amount of money coming in, and these numbers, they got to make them work, right? I saw the client this weekend, and she was like, yeah, I got to make it work because I need this coverage, and I need to make sure I've got money left over for my daughters. I was like, you got it. So how many of you are selling mortgage protection right now? I just need to see in the chat below. Any of you? This guy. One guy. Matthew Reed starting. Anyone else? Because I got a whole thing on it, but I don't want to blow you away.
Make sure when they're typing to change the drop down to all panelists and attendees.
Yeah, make sure you're on all panelists and attendees. Patrick Reeder. Starting with mostly final expense in here. Theo. Am I doing Theo Cooper? Okay, let's do it. Right? Let's do it. All right, I'm gonna teach you. This is how I sell mortgage protection. And this has made me a lot of money. And so what I'd advise you guys to do in your lead strategy is to always start with final expense for you and your new agents. And the reason for it is they're just simple people. They're simple people, right? Simple people looking for some protection, hoping they can get approved. All whole life, all whole life, all simple. Mortgage protection isn't a whole different beast. It's just you're dealing with some younger people. So you've got to kind of navigate some different things that you've got to get learn about. How I started mortgage protection was I bought every single aged mortgage protection lead in Maricopa County. It was just a crazy click of the button. I wanted to grow my business. I knew the only way for you to make more money, is to buy more leads. That's it. Whatever you're doing, whatever you're thinking, and you're hoping, and you're going to try some referral plan. I had a guy one time say they're going to set up a table outside of Walmart, and I said, I don't remember Sean teaching that. I probably wouldn't recommend that. And like the only thing that's keeping you from where you are to the financial security and success that you want is the investment in yourself. And in yourself is purchasing leads. And so what I did, I bought a ton of final expense leads. What I would also do is buy age mortgage protection. And age mortgage protection, having a bunch of them, allowed me to, when I book up a 10, 11, a 3, and a 4 of final expense, to go into those areas wherever I was, whatever part of the city, because Phoenix is like 2 hours wide, is I would go into those parts of the city and I'd check my CRM and I'd say, okay, I've got 13 leads in this zip code. I'm going to call the heck out of them because they're 4 minutes away from these other 2 appointments. And I'd call them and I'd book an appointment for a noon and a 1. And so now I've got a 10, 11, a 12, a 1, a 3, and a 4. And I would be able to fill in my schedule by having a batch of age leads. Now, it always started with new leads. And so that's how I started mortgage protection. New mortgage protection leads are like 60 plus bucks a pop. You got to be ready for that investment if that's the direction you want to go. And you will get there. You will 100% get there, but you have to learn how to sell. You got to tighten up your presentation. And then you have to learn some of these things on how you even present it. Now, this is how I present. There's a lot of different people who did a lot of different ways. Frank Euphemius got a fantastic presentation. Matt Smith has some great stuff on YouTube. A lot of people just go right at one quote. Now, this is just an educational way while I roundabout kind of am backing them to a corner, understanding they have to get something in place. Okay, so you ready for this? I'm gonna do it. I'm gonna do the drawing, Julius. See, I do the whole drawing. Julius is trying to optimize this thing by having it all done. I think there's good, people appreciate the effort. I think maybe I'd sell more. I don't know. See, that's what this business is about. Always trying new things. Speed. I'm pretty quick, bro. Watch me draw these lines. Okay, so this is how I sell mortgage protection when it's a mortgage protection appointment. Okay, so they give me all their information, right? I get to the bottom. You know, do you have any insurance, private or work, right? Yes or no. And I can knock all that out. I kill their group policy because, listen, you cannot protect your 2 girls in the other room based on a policy that Nancy down in HR set you up. So what most people do is they get a private policy from a private carrier that they actually own, if they get approved. Always take it away. So, and then I go through it, do you have a will, et cetera. So then I go like this. I go, okay, perfect. Now let me show you your situation. I take a blank sheet of paper and I draw this out, what I'm about to show to you. Show to you. Okay, I'm losing it. So here we go. So what I'll do is, so let's say let's just kind of say like this. Let's do hypotheticals here. So their loan amount is, their mortgage amount is $200,000. Their house is worth $250,000. So I do this, and then it's a 30-year loan. And so I just go like, I'm talking like, oh, what brought you guys here? Where'd you guys move from? Or, you know, very cool. How'd you guys meet? How long you been married? Just chatting throughout the process. I draw this, and I go like this. Okay? So I just get that drawn out, and I take this sheet of paper and I turn it around in front of them, and I lay it in front of them and I point at this. So imagine I'm above them. This is right in front of them, I'm pointing at it, okay? So what I do is, okay, so now listen, Jim, this is your situation. Right now you've got your $200,000 mortgage going down and your $250,000 home value going up as time progresses, and as more Californians move in here, more Coloradans move in here, etc. Right now, you have about $50,000 in equity, which is great. But the big thing to understand, Jim, is that as nice and sweet and loving as the mortgage people were, they're a business, which means they're evil vultures, and they'll do anything they can to take this money from your family if something isn't put in place to either pay this off, down, or money for mortgage payments to aids in transition. Now, if they're seniors, plus 50, plus 60, I'm pointing right at this and I'm saying this is what's most common. Okay? If they're younger, then I just leave it like that. Pay it off, down, or money for mortgage payments to help out in transition. Okay? So, and then so I kind of let that settle in. They hear it, it settles in, they feel it, they're like, okay, well, this is serious. So this is what it is, the way it works, Joe. What most people do is, you know, based on your situation, John and Mary, Mary, if something was to happen to John yesterday, this is what most people would do in your situation, okay? One, now this is given a situation they can't afford it without it, right? Because you found out earlier, you said earlier, based on if your household's anything like mine, I bet it takes both your incomes to make it work. And they agreed. So, right, so now here we are. We're saying now, okay, Mary, if something happened to John yesterday, this is what's most common, what most people would do in your situation, okay? One, they would move someone in to help make the payments. Two, they may rent it, turn it into Airbnb or something like that. Three, they may sell it. Might just sell the property, and maybe the equity's even grown. They take that big chunk of money, they go buy another house and get out of payment. But now, this is the last one, they might need time. Well, now, why would they need time? Well, they may need time, well, as the market we know has been going up and up and up for the last 9 years. But as we know with markets, they go up, and then they go down, and then they go back up again. So God forbid, John, that something happens to you here, Mary's going to need money to get the property back up to here to recap all this equity. Does that make sense? And they go, yes, like a freaking pin dropped. Because it sets the property's going to go up, it's going to go down. If it's down, they need money. If it's up, they need money. They've got money, they got to protect it. There's need for life insurance. So say they're 30 years old and healthy. Okay, I'm going to show them these three things. And this is really how I do it. I say, okay, so based on your situation, this is the 3 products that I believe you may qualify for. Now, I've been doing this a while, and my job is just to kind of show you the options and educate you a little bit, and then you tell me which one you like, okay? So here we're going to go. 30-year-old, healthy. 50-year-old, it'd be a little bit different, but probably still very close. So John, the 3 main products are, one, the first one's called term. Second one's called term plus CBO. And the last one is called traditional mortgage protection, or like a tragic policy. And then I come back over here and I say, okay, so the first one, term, it works like this. It's a 10, 15, 20, 25, or 30-year period of time where if anything happens inside that period, 2 things can happen. 1, there's money for you. And 2, there's money for your family. Okay? So what does money for you mean, John? Money for you means is, God forbid you get sick. Severely disabled, cancer, stroke, heart attack, kidney disease, some outlier terminal illness where you're probably not going to live for another 12 months or so. What the insurance company is going to say is that because you got approved with the coverage while you were healthy, and God forbid it's unfortunate you got sick, they're going to give you the money, $100,000, $200,000, $250,000 of whatever of the money to allow you to live longer. They're going to give you the money, a chunk of money to say, hey, try to keep going, man. And so as you told me, you don't have anything in savings. So if the doctor tomorrow, if the doctor in 6 months goes, now listen, John, we need $79,000 for a surgery. Otherwise, you're probably not going to make it another 3 months. What would you do? You'd sell everything, probably one of the kids. Now, I probably don't say that in this moment, but I try to bring levity as often as I can, but also being serious. What would you do? And he's going to go, he's not going to say anything because he's dead. And so you say, but because if you get approved, you now have access to $100,000, $200,000, $250,000 that you can pull the money right out of the policy because you got approved when you were healthy, and now use that to extend your life. Pay for medical bills, medical treatments, settle affairs, whatever you need. So it's a really good policy. I hope you get approved. Just dropping little lines. Also, God forbid, John, something happens and you just die. Well, here's money from Mary, okay? So the way the policy works is you pick a period of time, and then when it's over, it's over. It does its job, okay? Next, term plus CBO. This is a 15, 20, 25, or 30-year period of time where 2 things happen again. 1, there's money for you. And 2, there's money for your family. But the way this one works, John, is this one's called a cashback option. So it means at the end, you get 100, instead of it just ending, you get a 100% refund. And that money comes back to you tax-free. And so sometimes people utilize this one as a savings program. And so the reason why it's tax-free is because life insurance is one of the greatest exemptions in the US tax code. And so what it allows you to do is right now we know, and I go through the whole Trump thing and the taxes are lower, they're gonna be higher, and they just go, you know, they're like, okay, well that's something, they're like, I like that one, you know, that one looks pretty cool. And then I just go on, okay, so someone's doing like a savings, and I don't pay any attention. I'm just there to show them the options, right? I'm just there to show them the options. Like, come over here. So now traditional mortgage protection, this one's like a tragic policy or like an accidental, okay? And the way this one works, John, is say hypothetically yesterday, you got into a car accident, cracked it, and I'm just making a whole mess here. Get into a car accident, crack a rib, puncture a lung, you go to the hospital, they fix you up, stitch you up, send you home. 3 months later, however, stitches don't hold, lungs fill with fluid, and you die. Well, because you died as a result of that original accident, the policy pays. So this is a way where you can protect yourself against anything that if you end up dying immediately from an accident, car accident, fall off the roof, put on Christmas lights, trip in the kitchen, slip in the bathroom, die of an accident, or within 6 months of bodily injury from that accident, right? Complications from that accident. So this will protect you if something happens and death happens accidental, okay? So the way the numbers work is that this one's a $1 sign, this one's a $2 sign, and this one's a $3 sign, because they got to give you all your money back. So I lay it all out like that. All out like that. And you know what? When people are really tight financially, they pick that one. When people are open, they go right to there. They go, I understand it's going to cost more. And they pick it. They're walking themselves into $100, $150, $200 a month policy because they pick it. They pick the policy. Pretty crazy. And then sometimes if this one's, so they'll pick this one, right? And I'll show them the numbers. And then we get through it and they're just like, it's going to be too much. And what do? Pivot back over here, because it's the same type of benefits, the benefits for them and the benefits for the family, but it's going to be less money. And they're going to go, okay. And now they see the options, and you're just the guy. You're just laying out the numbers, you're laying out the information, you're laying out how it all works, and guess what they say? Thank you. Wow, because you're educated. You know how long it took me to learn this? Not that long. I just did it a few times. And I you know what I did the first time I started doing this? I had these notes on my sheet underneath my sheet, and I just kind of copied it and drew it and traced it. And like, you know, the clients don't care. They don't care. They just want you to just tell them what's going to happen. And so when you lay this out, they go 200,000. So you go 200,000 right here, 200,000 right here. And then you go 15, 20, 25, 30, and you write, this is America HMS we're obviously talking about here. And you go right there. And then you say, okay, this works, John, it's if you get sick, God forbid, you have access to $200,000 they're going to give you to pay for medical bills or treatments, whatever you need to try to extend your life. John, if you die, they're going to give this much money to Mary. And then if you don't die, and I have it written out, the monthly premiums, so monthly, and then refund right here. And then when you don't die, John, this is all the money you get back tax-free. And they go, and they pick one. They pick one, right? Somewhere in there. And they go, I can afford the 30-year. It's a great option. Great option. You're going to be 60. You're going to get a big chunk of money back. And you have protection the whole time. So that's why I asked if you guys do mortgage protection. I'll check these questions here in a second here. I want to get through all the notes. But that is unless there's something pertinent. Is there anything?
I can't see everything.
Under chat? If you guys can just go to all participants and chat in there, because I can't go through all these individual chats. So that was mortgage equity protection presentation, number 8. All right, number 9, objections, okay? This one's fun, objections. Big thing about objections is this. It's, Julia, say to me, I need to think about it. Why do you need to think about it? What do you think about? It's great coverage. You die, she gets paid, right? That doesn't work. Don't do that approach. Say, I need to think about it again. Say it louder so they can hear you.
I need to think about it.
Okay, perfect. You should think about it. But the main thing is you're not approved yet. So what most people do is they want to submit a request for coverage and find out if you can get approved. Find out, if they're going to accept you. Because right now we're just looking at these few different options, and these numbers are all locked in if we can get you approved, but I don't have an answer for you yet. The main thing I'm trying to illustrate is my tone doesn't change. It's like I'm a mute actor. I'm an actor, we'll just go with that, I'm stone solid on my response because I'm not getting emotional. Like I'm not physically frustrated or visually frustrated by anything they say. I'm smiling. I've told them who I am. I'm just here to submit a request for coverage. It's totally neutral ground. We're on the same team. I'm a broker, but my job is just to help you find out if you can get approved. And when you act like unfazed by what they say, you'll sell more insurance. Because they're not like, well, Grady, you've been great, and we're going to tell all of our neighbors about you, but we just can't do it at this time. Great, thank you. But right now, you're not approved, and the reason why I'm here is because you submitted this request. You have 7 children, so if something happened to you, Mary or Bob, you're going to lose the house. So what most people do is they want to find out if they can get approved, because if they can't get approved, then we can always adjust the price up or down. But like right now, it seems like there's a big need here, because if your household's anything like mine, it takes both your incomes to make it work. So if one of you wasn't here tomorrow, you understand that you can't afford this policy. You can't afford the mortgage, right? And so it's just like neutral. You're just talking. You're not like, well, that doesn't make any sense to me. Like everybody else I see buys this insurance because they want to protect their family. You don't love your family. And that approach won't work. When you get combative with your clients, they now don't trust you anymore. They want you to F out of their house. So what you need to do is just be neutral and try to diffuse and talk about what they're saying to you is not something that you probably should think about it. But right now you're not approved. I'm just a field underwriter. I don't approve people. What I do is I help people submit a request for coverage. And it's just totally calm. If you meet me outside of a life insurance presentation, you get my outgoing, fired up personality. Inside of a life insurance presentation, I am stone cold Steve Polson. So, wow. So hope that makes sense. But does that make sense, right? Tone, it's totally neutral. No matter what the client says, your response is cool as a cucumber. Okay, that's number 9. Number 10, staying on that same vein, is challenging clients, but challenging clients by saying, instead of making statements, now, Bob, Mary won't be able to afford this house. I think I just did this, but I think I just did it incorrectly. But what I meant to do is say, now, Bob, what would Mary do if something happened to you? Ask a question versus make a statement. Or if Mary's sitting there, Mary, what would you do if Bob didn't come home tomorrow? And then be quiet. Pausing, silence. Think about when you're talking to a significant other. Think about talking to a child, right? Silence. Silence. It's like they say something, right? Someone says something to you and you just don't respond. They're like, what are you thinking? What is going on in your head? So they're gonna have to respond. So instead of saying, Bob, Mary won't be able to afford this house, you've got to get this insurance. Mary, what would you do if something happened to Bob? I don't know what I'd do, Grady. I don't know what I'd do. I understand, Mary. Most people wouldn't either. And so what you can do is you can double push. Okay, you can push again. So you go, Mary, what would you do if Bob didn't come home tomorrow? Well, I don't know what I would do. I don't know. And so right there, I could go, I know most people don't know what they would do. So that's why most people get this insurance. Now, how you double push, you just say, I understand you don't understand, but let's think about it for a second. What would you do? Would you sell the house? Would you go rent an apartment? Would you move in with your sister? What would you do? Well, I'd probably have to sell the house. You know, and like you're getting them into it. Does that make sense? Like let's get some chatter in the chat box. Does that make sense? A double push, right? You can be soft and you can go, yeah, you know, most people don't know what they'd say. That's why they get the insurance, and you kind of let her off the hook. But when you make them answer, and you're just being respectful, like well, I don't know like they could get uppity, but like if you've built enough trust, right, this wall of trust around you that you're the expert and you sit with all these people and your job's just to guide them, double push. What would you do? I don't know what I'd do. Well, you know, let's really think about it. Like, you know, Bob's not here. $4,700 a month income's no longer coming in. You guys don't have any savings. What would you do? And be quiet. And they're gonna look at each other, and then it's gonna be like they're gonna say something. And then you're like, okay, so the way that, like, and a lot of times you're pushing in that when they are, I need to think about it, or we don't really know if we need it, or you get this real jerk husband who's like, you get some guys that are like, I don't really care what happened, you know. I'm not, like, I have this, oh my God, just awful people. We're not gonna go down there. It's just, there's a lot of bad people out there. So you just leave the house on them and just pray for the spouse and just say, God bless, you know, do the best you can. But most people, when you push on these situations, are going to come into the fold with you, and they're going to follow you down, and it's going to make sense, and you brought out something that's important for them to think and talk about. Number 11 and final point, you use this line. And this is a recent line I learned from Frank Euphemia. And this is why it is so valuable to listen to all the podcasts and all the training calls and be on the Next Level Live call and be on the AMS call. There's like 4 or 5 calls a week that will educate you to make $100,000, $200,000, $400,000, $500,000 a year. Yet most agents, and I bet most of you on here, weren't on the call this morning. And I'm not going to make you say you were or you won't, and I'm not going to ask you questions about the things that was said on the call this morning. But the guy who spoke this morning wrote $22,000 in his first month, and he was excellent. He became a student of the business, studied like crazy, took massive action, and went out there and made $22,000 in his first month. Golly, that's what's possible for people that really want change. Not people that are hoping things will change, people that are wishing and hoping they get a good batch of leads and then they're just gonna do whatever. People listen to all the calls are the ones getting all the information and getting all of the success. There's no secret, right? There's no real secret at the top. These people didn't just luck out and get up there on hope. So, line I heard recently from Frank Euphemia, and I've used it in every single appointment since the second I heard it. It came out like 3 weeks ago. It was the call where he does is an excellent Inside the Sale of Frank Euphemia. Go back and find it. But he says this. He says, when you're sitting with the client, this is point number 11. The top 2. Now, John, do you know what the top 2 reasons why people lose a home? First is death, and second is a critical illness. And this product right here takes care of both. Death and critical illness. And then they start thinking, yeah, I got this buddy at work that got cancer. And Sally starts thinking, yeah, I got this girlfriend who just out of nowhere had a heart attack. And that's what you're trying to find. You're not just trying to get them to remember all their friends that were sick, but you're trying to get them to think and understand that this policy does significantly more for their family than just leaving money to Mary. It protects John as well. And then guess what? When they don't die, they get all their money back. Same thing applies for Eagle and Living Promise and all these other benefits. The living benefits are inside of all these policies. But the line is, the number 1 and 2 reasons people lose a home is death and a critical illness. And this product with the living benefits accompanied with it accomplished both. So there you go. Some good stuff for you. 11 points to hopefully implement in your business. Got a lot going on. Let me see. Are there any questions in the chat? And we'll send you back off to your day. What does MRST mean? Great question, Loretta. You're writing these and you're saying most families might move someone in. They might rent the property. They may sell it, or they need time. Now, why do they need time? Well, because the market goes up and it also goes down, and God forbid something happens down here. They need money for time to make that mortgage payment to get the equity to climb back up in the property. So, anything else? Any other questions in here? It's a lot of good stuff. So, all right, guys, you want to chat for a minute, or are you tired?
I'm not tired.
Julius isn't tired. Julius wrote $38,000 last month. He's going to get up and share on how to not be soft.
All right, let's go.
Julius is here.
Let's go.
So this is the good stuff.
Let's not be soft.
How to not be soft.
I'm going to go through this quick, rather quick, but I'm going to go through a few key points. All right. Thank you, Grady. So great job, guys. First off, everything that Grady has went through is something that at some point or another in this business I had to learn. And I'm still learning, right? So what I would share with you guys is I was attached to Grady when I first started in terms of just learning all the different word tracks that he uses, all the different approaches he takes, if you will. And so everything that he just went through, that's your money. That's 99% of what I do. There's always going to be a 1 to 5% factor of being yourself and kind of making it your own. So take what Grady's training you on and make it your own. But let's talk about what happens with people in this business. And what we find is that people get started, but they also get started very weak, and they end up becoming very soft. And sometimes they do stuff, and sometimes they don't do anything. Okay. But the first thing it really starts with is making a decision, okay? And if you guys are on this podcast or on this webinar, you guys have made a decision to start here at Family First Life, okay? But what kind of decision did you make? Did you just make a decision to just be here? Did you make a decision to actually do something and do something worthwhile? You guys got to ask yourself that, right? Because your decision to just get contracted with Family First Life does you no good. Does you no good. If you're not helping clients, you're not making any money. If you're not studying, you're not on the calls, you're not joining these webinars, and you're not being a student of the business like Grady mentioned, what was the point of joining? What was the point of joining, right? So you guys got to ask yourself, number one, what decision did you make when you started here? What did you envision? What were you really thinking about? What did you want to do? Right? And if that's crystal clear to you, number one, make sure you remember that, write it down, put it somewhere. You got to have that. But you got to really ask yourself, what decision did you make, right? Do you want to be a vice president here? Do you want to be a board member? Do you want to be whatever you want to do? You got to commit to that, number one. That's the decision you got to make, right? And if you haven't made it yet, that's okay. If you're listening to this now and asking yourself, what's that decision for myself? Then get to that point, right? Make that decision, okay? But ask yourself, why are you here and what are you looking to do, number one? Because if you have something to anchor yourself onto, whether it's 2-3 years from now, 10 years from now, whatever it may be, you're going to have a bigger purpose, and that bigger purpose is going to help you or prevent you from being soft in this business, because this business, while it's simple, it's also going to be challenging, and there's going to be some hard work, okay? That's number one. Number two, you got to understand that, guys, you are in control. You're in control. I'm in control. Grady's in control. Everyone is in control here of their own destiny. You are in control of your own fate. If you're writing right now $1,000 to $3,000 in issue paid business a month, guess what? That's what you're in control of right now. That's all you're doing, and it's because of action that you're taking. If you want to write $256,000 in issue paid business like our man Grady Polson did last year, guess what? He was in control of his destiny. He took the bulls by the horn, right? Last month was my highest month here at Family First Life. issuing $38,000 in business. Well, guess who did that? I did that. I took control. I wanted to do that, right? And so you guys gotta understand that this is not something that Family First Life is trying to figure out. We figured it out. Sean Mike Killiman, Andrew Taylor, Grady Polson, and all the other people that have come before us have figured this business out. This is not a proof of concept. This thing works. It works really well, right? And so the business is very predictable, right? So how do you remain focused? How do you remain in control? How do you avoid yourself from being soft? Is you got to understand, A, that you are in control in all steps of this business. Number one, your attitude at the end of the day. Number two, your activity. Your activity starts with your leads, your booking appointments, your in-home presentation, everything that you can control every single day that you're in this business, okay? And then it goes to, you got to know your numbers. I'm going to bet 95% of the people on this webinar right now, or that may be seeing this at a future time, don't know their numbers. And if you don't know your numbers, it's kind of hard to understand how to have control, right? Because if the business is predictable, when you know your numbers, then you have control. Does that make sense, guys? So let's talk about those numbers, because I want you guys to know what those numbers are, because I think that's going to give you guys some vision and help you guys have a little bit of clarity on what you should be expecting every single week, every single day, etc. Okay? How many of you guys want to know the numbers? Let me see some engagement in the post.
I want to see them.
Oh, you want to see them? Grady wants to see the numbers. All right. All right. Juan wants to see some numbers. All right. And then the people here want to see them. All right. So let's talk through it. So number one. All right. It's all about booking appointments, right? We talk about 80% of this business starts with booking appointments. So first and foremost, if you're going to dial 25 dials, expect to book at minimum 2 appointments, but you really should be trending at around 3. Okay? 25 dials, 2 to 3 appointments. Okay? Now, if you're full-time, you should really have 25 appointments at minimum per week. Really no less, 25 is really where you want to be, no less than 20. If you're part-time, obviously, you know, that's a little different. But if you know you got 25 dials, it's going to get, you're going to get 2 to 3 appointments out of 25 dials. All right, so now you can start to do some math to figure out, well, if I want 20 appointments, how many hours or how many dials, excuse me, do I need to make? Do the math. Okay? Now, let's just say you set 10 appointments for the week, which is very part-time, but let's start there because many people start out part-time. You set 10 appointments for the week, how many are you going to actually sit with? Well, A, it's going to depend on how well you set them, but on average, you should sit with about 7 people of the 10. Okay? You're going to have no-shows, you're going to have reschedules, whatever. It's part of the business, guys. When that happens, and I'll be the first one to admit, when that happened to me, I would be pissed off. I was pissed. You can ask Grady. I would call him like, this person, this blah, 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 blah. And we'll get to that part in a minute of how I needed to improve my mindset to kind of get around that. But 7 people you'll sit with out of the 10 that you book. Now, of the 7 that you sit with, as you're starting off, you'll sell about 3 to 4. That's 50%. And to be honest with you, that's pretty low, okay? Because you should really be closing about 75% once your skill set gets better, okay? But if you're assuming only a 50% close rate, that means you're sitting with 7 and you're closing 3 to 4, okay? Let's just do the math on this, right? If you bought 20 leads, okay? You bought 20 leads and you sold 3 to 4, and the average commission on one is about $750. and you only sold 3, that's over $2,100. Okay? It's $2,100, and you've only paid about $400 in leads. You're in the money. Okay? So when you know the numbers, and you know the activity that's required, and you know the outcome that's going to happen if you just run the numbers, you can start to take the emotion out of it. Does that make sense, guys? For those that ask for numbers, does that make sense? Does that help you understand how the numbers work out and how you can have clarity and understand what you need to do at the end of the day? Okay, good. So, and that's only closing 50% of the time. What if now you start closing at 60%, 70%, 80%? What ends up happening? You just got more profit. It's more bottom line. That's more in your pocket. That's more money to buy leads with. That's more, it's more, guys. And that's what allows you to really, really just have that vision of, okay, if I need to do X, I got to back into the number. I got to reverse engineer my numbers to figure out where I want to be. So if I want to be at 30K in issue paid business a month, well, I just gave you the numbers of what happens when you book an appointment, how many you're going to sit with, and how many you may close. So just do the math, guys. Do the math, okay? Now, once you know the numbers, now you just got to run the business. This is where this is going to take a little bit of, you're going to grind your teeth a little bit, okay? You're going to get kicked all over and punched, and it's just part of the learning process, okay? But this is business, guys. And what we talked about is you gotta remain in control, right? So if you know the numbers, remain in control, and you can't allow the customer or the client to take you off track. So simply, if they tell you no, like Grady mentioned earlier, his tonality, his voice, pace, and the way he speaks does not change. He doesn't get excited all of a sudden because he's trying to save the deal or whatever the case may be. Yeah, we're going to do what we can and say what we need to say to help the client understand the magnitude of the situation and what could happen and why and etc. But you continue to just go down the same path. Like it has no bearing on what's going to happen once you leave the room, right? Yeah, we all make some income off helping clients, but at the end of the day, you got to act like there's no relevance to you. Whether you get a check or not, it doesn't matter, right? Because as soon as they get the sense that there's something in it for you, they're going to take a step back. But if you're coming and you're presenting a solution and asking questions and really being a consultant with the benefit of the customer in mind first, all that other stuff goes away, okay? So you can't let the customer take you off track, whether it's in the home, whether they no-show, whether they reschedule, it doesn't matter. If you have a full day of no-shows and reschedules and you haven't sat with one person, you had 7 appointments that day, it doesn't matter, right? Because when you look at this business, guys, it's not about a day by day. It's not about an appointment by appointment. It's what are you doing over the long haul? What was your month like? What was your month like, right? Not what your yesterday was. What happened over the month? Did you grow? Did you learn some stuff? Were you better than when you started? Did you progress? Right? And if you're asking yourself those types of questions and you're genuinely progressing through the stages of growth in this business, and it'll be different for everybody, you are already winning. And that's where you start to really build that mental toughness in this business. That takes a little bit of time. It doesn't happen overnight. Some people are better at it than others. But that's the mental toughness you guys have to have when you start from point A, which is just getting contracted and you know, buying your first set of leads, to becoming a vice president, to becoming a board member, etc. And so it's really understanding that, guys. Let me look at my notes real quick. What else did I write down here? All right, last thing, kind of wrap up with this. I went to a seminar once, and this really kind of hit home for me. And some of you guys may have heard an analogy similar to this, but when you're talking about growth, okay, there's one of two things that happen with people And you're either growing or you're dying, okay? It sounds kind of, what's the word I'm looking for? Not necessarily, huh? A little morbid, right? But there's really two phases that happen, guys. Either one, we're growing and we're progressing, whether it's in life or in business, right? And when we're not, we're dying. And I'm going to use a plant as an analogy. This is how it was used with me. Have you ever seen a plant that kind of just stayed in its same size and shape forever? I don't know about you guys, but I haven't, right? Most plants they're either going to grow, there's new petals growing out, new branches, etc., or they just start to die and decay. And us as business owners or independent contractors here with Family First Life, it's kind of the same thing. This business is about progress, okay? You're not going to be perfect from day one. You're not going to be perfect at the end of your career here either. But the key is starting at a certain point in your business and constantly working on getting better. What skills are you learning? What did you take away from today? Did you take away at least 3 things? And if you haven't, I don't even know what the hell you guys are doing. But if you didn't take away at least 3 things, and not only take them away and hear them, but actually apply them to your business, right? Execute on them, use them to help you further along, right? So what are you doing to learn and progress in this business? How is it helping you? What word tracks are you taking away from Grady and these others that are really helping you get further ahead in this business? Is your close rate getting higher? Is your show rate getting better? Is all these different things that you can look at, but you got to remember, it starts with number 1, you. Yes, you. Each of you that are here attending now, or we'll see this later, you are in control of that. But it starts with understanding your numbers, understanding what you envision when you started here, and getting on the track to getting there. Okay? And so I just want you guys to really take a step back. And if you're not where you want to be today, that's okay. Okay? Because here's the great thing about this. No one can judge us. No one. But do you want to be further ahead 30 days from now, 60 days from now, 90 days from now? Do you want to be a 20K producer, a 30K producer, a 40K producer? Do you want to be an agency manager? If your answer to any of that is yes, and it should be, otherwise I really don't know why you're here. Sorry for just being very direct, but that's just the reality. Then you got to ask yourself, what do I need and who can I get it from? And most of those answers are going to be right here in front of you between Grady, myself, and any of the other people that are in our business. And so I just want to leave you guys with that. We don't have time to be soft, guys. We're all here for a greater purpose. It's bigger than ourselves. Continue to learn, continue to improve, continue to grow your skills, and you'll be exactly where you want to be when you're destined to be there. So, guys, amazing training today. Grady, great job. For those of you out there, I hope you guys got some real good information that, again, you're not just going to take and hear it one time and never use it again, but really apply it to your business. Let's go out and crush it, guys. This is the second half of the year. Go out and crush those goals. If you need anything, you know where to find us. We'll talk to you soon. Take care.